was actually looking at. And this is the dollar CAD. Okay, dollar CAD is pretty correlated to oil. All right. So this is just an initial show of what I am actually looking at from a fundamental perspective when we're looking at oil prices. Now, if you notice on the screen, dollar CAD, there's a slight correlation to oil because there's two things. CAD, the Canadian dollar benefits from the strengthening of the oil prices due to Canadia's large import-export industry. And the US dollar is also affected because of its status as a petrodollar. So as a petrodollar, what it actually means is that a lot of countries that trade in oil, they actually purchase the oil in US dollars. So oil is quoted in US dollars. So a movement in oil prices, because oil is transacted in US dollars, therefore US dollars will also be mildly affected by oil. But largely the import-export countries, which is Canada, Australia, and New Zealand, they are what we call the condo currencies, the commodity currencies, where strength in oil prices will give it a very good boost, all right, and a weakness in oil prices will pull the currency value down. So it's a very complex balance of trade situation we're having there. But what is interesting to see is that it's a certain lead towards where oil prices go, towards where certain currencies go. So you can see at certain levels over here, let me just draw it out on my screen. All right, that at some point there is a divergence meaning that oil prices and the dollar CAD actually move away from each other, and then eventually you can see that prices kind of catch up again. All right, catch up with the oil price. I mean, you can see over here, overall, there is mostly the prices actually follow the dollar CAD actually follows the price of oil. And then after that, it kind of flattens out minus choppiness. So I'm on a daily time frame. And we have another divergence again over here. So what this means is when there is a divergence, as oil prices head towards a certain direction, eventually the dollar CAD will kind of catch up again, depending on where the direction goes. So it's a very complex situation. But when we look at the dollar and the CAD on its own, what statistics does the dollar and the CAD actually bring to you now? As of a couple of weeks back, somewhere in I think the first week of August, all right, the CAD actually shows bearish signs of seasonality for the first week of August. So when we talk about seasonality, based similarly to the CAD, let's look at where it is over here. Right, you can see for the month of August into September, the Canadian dollar is relatively flat, all right? It's relatively flat with a potential uptick towards the end of August into September, which we are kind of entering in the third week of August right now. Now, the timeline for this is usually quite fluid, meaning that the move can actually happen early or it can lag a little bit and happen late, depending on where market goes, all right? So put it together, you get a Canadian dollar that looks slightly vulnerable in the short term, all right? But depending on if the Bank of Canada continues to cut interest rates, then the effects will be felt. And also what is happening on the US dollar front. Now, with Kamala Harris taking over in the markets, there is strength in the US dollar coming back to the markets, because they are expecting Kamala Harris to give Trump a really good fight into this. And if we follow the Fed Watch, all right, the Fed Watch is where there is a poll of where the interest rates are. So you can actually, I'm going to paste this for you guys in the Zoom link. You can click in the Zoom link to get the Fed Watch tool. All right, so I'm pasting it in the Zoom link. So what is interesting is there's dates over here. So if I click to 18 September, which is this date, there is only a 75% probability of markets of the Fed cutting its rates by 0.25% and a almost 25% probability of rates cutting its a bit more aggressive in the interest rates. But if a 75% poll tells the market that there is only a slight probability where the Fed will cut by 0.25. So where is the interest rate now? The interest rate is actually at 5.5% right now, all right? 5.5% is the current target. For it to cut 0.25%, there's a high probability in September, which means about a month from now, that the Fed might cut its interest rates, all right? And if we look on to 7th September, this is December, you can see the probability change, which means that if the Fed does cut its interest rates by 0.25% in September, then it might be it for the rest of the year, and markets will kind of respond and adjust to that in terms of where its balances are, all right? I do feel in November we should have a different reading because the election is up and coming, and we should have a clearer idea of who's going to win. And if just on an overall basis, if Trump wins, there is a high probability that the currency will weaken because of Trump's protectionist stance on the economy. If Kamala Harris wins, there will be a slight probability of the US dollar strengthening because of her stance of what to do with the economy. All right, so we have two camps over here, and that is why I think for the next couple of months into November, the US dollar will be a little bit volatile, a little bit more range bound, but we can expect a large range bound market that we can trade in. So back to the dollar CAD. Okay, back to the dollar CAD. What I am looking for, given its correlation with the oil price, all right, what I'm looking for, if you can see, price of oil at the bottom screen over here has just gone up to the $80 mark in the last week, come back down to the 76, giving us a nice, what I think one of Lloyd's favorite quotes is a break and retest of a level. And there is potential of oil price strengthening, which comes in line, all right, it comes in line to the seasonality again, where if we look at seasonalities for the oil prices, you can see that over here, there is a good probability of oil increasing in strength into the at least mid-October. All right, so oil has a high probability of a buy season. So this should give the Canadian dollar a little bit of strength. And what I am looking for as well, looking at the technicals of it, you can see on Friday we have a large red candle appear. If I zoom in over here, what I am looking for is a continuation of this move to the downside. All right. And again, while fundamentals give us a general direction of where we want to trade it, we always need to look at the technicals for confirmation and for entry. All right. So what I'm seeing now is the dollar CAD has already made this move down, giving a stronger CAD a little bit of a positioning. But again, we don't want to be caught in a retracement move. I would rather pick this up when price has come back a little bit, maybe over the top of this range over here, and take it towards the downside. First level of exit over here. All right, first level of exit over here. Unless price can confirm that it will break below this level, then only we can take it to the next level with one eye on the oil prices. All right, so I am actually $4 cash short in the interim, at least until the oil prices peter out. So when I'm trading Canadian dollar, always one eye close to the oil prices, just to make sure that we are in the general direction of a stronger CAD due to stronger oil prices. All right, so this is one correlation that I would like to watch. Now, another currency pair that I am looking for actually is the euro pound. Looking at the euro pound has just broken below I think what you can call this a pennant or flag pattern. Most flag patterns are supposedly upside, but of course the opposite happens from time to time. And when this happens, it gives a very strong strength to the bottom. And the reason why I'm looking at a euro pound short is because I'm slightly bullish on the pound. Now, for the pound, what has happened in the pound is that the pound has had a month back, a new president has taken over, prime minister, excuse me, and there is a little bit more good news coming out from the pound. When we look at the statistics for the pound as well, all right, over here, all right, interest rates is still high at 5%. What is on the positive side of the pound is that its inflation is kind of controlled near its 2% mark. If we click into the jobless rate to see where the jobless rates are, the jobless rate has actually fallen a little bit by quite a nice chunk of 0.2%, which is quite a nice big, instead of like 0.1, 0.05, it's gotten a nice big 0.2 chunk of the jobless rate. If this sentiment can hold, there will be more strength coming into the pound as well. All right, so I am looking for a little bit more strength in the pound because of where the fundamentals are as well. And this is why euro pound has become interesting to me, because when we compare this to the euro, let me go back to the euro over here. When we compare this to the euro, and we click into the jobless rate information, let me just go into. All right, you can see as comparatively to the euro now, don't mind the bigness of the bar, this has actually gone up 0.1%. All right, so unemployment has actually gone up in the eurozone, even though it's by 0.1%, but you can see here that euro is kind of losing its strength against the pound. It's kind of dragging down a little bit. There is something happening in the euro side which makes me lose a little bit more confidence, but the euro pound is one of those currency pairs having a weaker interest rate as well. I think the pound should outweigh the euro in the short interim. So euro pound is one of the currency pairs I'm looking at as well. Now, last but not least, this is what I've been looking at for several for the last 2 weeks, but it hasn't quite appeared yet. Two currency pairs, Aussie Swiss and Kiwi Swiss. Now, what I do love about Lloyd's analysis is he tells me that there is a potential of a strengthening of Swiss, which is what I'm waiting for. Now, between the Aussie Swiss and the Kiwi Swiss kind of looks a little bit better at this point because of the technicals as well. It looks like the strength has faded off from this retracement move. And what I am looking for is for a short Kiwi Swiss move because the Kiwi statistics is also not as strong. Now, if you guys want to find out more, if you are subscribed into the Sunday fundamentals I do at night, which is a longer session, and I can fit more in there, just join me tonight at 8:30 for the session. All right. In the meantime, that's all the time we have. So we have got the currency pairs, and I hope you guys have a great trading week ahead. Remember, no matter where the fundamentals or the technicals go, always use a strategy, have your risk management, and you guys will be great. All right. Thank you. And